Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors are realising that they may have overreacted on Tuesday. Equity markets are rising again, having apparently shaken off the concerns that caused the rout. The S&P 500 is up 0.8% so far today after being up 1.5% yesterday. These rises come after a 6% cumulative fall from this time last week, so today's level is still 3.8% net down. Spurring the realignment higher is the realization that the world's economy is not in bad shape at all, certainly not enough to justify a 6% fall. Another separate question is whether equity indexes should have been that high in the first place. If not, a fall and maybe more could seem quite justified. And today, bond prices are being pushed down again by the same market forces that triggered the turmoil. This time, however, acceptance that yields are on the way up is in place. But the notion that the world's economy is actually in reasonable shape is reinforced by the latest building permit data out of Canada. Even in the depths of winter, approvals came in much stronger than markets were expecting. And even the US Congress seems to have reached a 2-year budget deal, averting a shutdown. But it still must pass votes there, and there is opposition on both the left and the right. Substantial new debt will be required for that deal. In China, a senior official has indicated that the government's grip on foreign currency outflows is to be loosened. It is going from a tight control stance to neutral. And somewhat related, we should note that the exchange rate between the Chinese yuan and the US dollar is at its strongest point since 2013, at 6.2882 yuan to the US dollar. But at 4.57 yuan to the New Zealand dollar, it is not so impressive. The point is, the Chinese are letting the Americans devalue without responding so far. And staying in China, the manipulative, secretive and generally dodgy boss of HNA is claiming that there are manipulative, secretive and dodgy moves out there to undermine his company, all part of a giant anti-Chinese conspiracy apparently. In Germany, 4 months of post-election wrangling is coming to an end with a grand coalition finally agreed. Angela Merkel remains the Chancellor. US 10-year yield is up today strongly at 2.84%, that's 6 basis points higher. Yesterday ended with the Aussie 10-year at 2.83%, the Chinese 10-year at 3.90%, and the New Zealand 10-year at 2.98%. It would not be surprising if all three took today's cues from Wall Street and moved up again today. But the New Zealand rates will have to have the extra influence of the RBNZ monetary policy statement positioning to contend with. Gold continues to be shunned, even in volatility. This morning it is $1,318, $10 lower than yesterday. Oil prices are down sharply, with the US benchmark now at $61.50 a barrel and the Brent benchmark just over $65.50 a barrel. Both are a drop of more than $1.50, and this has probably been triggered by fast-rising US petrol inventories. The currency markets are sailing along as if nothing has really happened. In the past week, the Kiwi dollar is now at 72.8 US cents, on the cross rates for a little change at 92.8 Aussie cents and 59.3 euro cents. That leaves the TWI at 74.1, which is generally where it was for most of 2018. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.